Yo, what's good everybody? Today in this video we're going to be going over liquidity sweeps. Alright, so I'm going to be explaining to you what they are. I'm going to break this down with charts, real-time market data, and just straight up no BS here, okay? So just make sure you guys listen up and watch. We're going to go over what the hell liquidity sweeps even are and why they happen, how to spot these moves on ES or SPY chart, any chart you can have, how to use real-time market data like the tape as well to confirm a sweep, as well as how to use any actual strategies to trade these sweeps without getting screwed over, okay? And as well, I'm gonna add in some pro tips to make sure that you're implementing in your trade to keep you from blowing your accounts. So I'm gonna keep this real, guys. This could be a long video or it could not be, but I'm gonna be explaining everything I can to you about liquidity sweeps and how you can trade them to make some money. Now, the first thing is you're gonna wanna learn is what liquidity sweeps even are. Let me put this here. All right, so you're gonna look at the big players, the big investors like hedge funds. You got banks, you got algo traders, all of that. They push the price up to a key level to trigger a shit ton of orders. Okay, like stop losses or any pending buy and sell orders. Why? Because they need that liquidity to fill their massive positions they have without causing the market to have too much slippage. So think of it like this, all right? They're just hunting for your stop losses and these breakout traders who just jump in and too early and they just use all that to fuel their moves, all right? It's just how the game works, okay? And your ability is to just catch the wave, right? Ride the wave. That's what you're supposed to do. You're not actually making the market move. You're just putting yourself during the time that the market's actually moving into an advantage of your position where you're actually making money when the market's moving. So in ES and SPY chart, whatever chart you're trading, right? But most importantly, ES and SPY, these sweeps happen all the damn time, right? Why? Because they are just very liquid, okay? They're one of the most liquid markets out there. So you've got stop losses clustered all around these obvious levels, like any swing high, supply and demand levels, what have you. And when the price reaches through those levels, it's just a huge amount of sweeping all these orders, hence the name liquidity sweep, okay? So here's the thing. After the sweep, the price often reverses pretty hard in the opposite direction, okay? Why that is? Well, because the big investors, the hedge funds, the banks, they got what they wanted, the liquidity. Now they're wanting to push the market their way, the way they actually want it to go. This is where you, the smart retail trader, if you do it correctly, can jump in and ride that wave. Now, first you got to learn how to actually spot this shit, okay? So let's pull up the chart that we have here, which is ES, okay? And we have, move this here. We have this level that I have here, right? This is going to be a supply zone that I marked out on ES. This here. All right. We had this supply zone marked out on ES at 66,140. Okay. Put that here. 6,140 was a supply zone that we had on ES. Okay. So how you're going to look at this is, let's say this is a supply zone on ES, right? And you're looking at this high, right? The supply zone, this high. You're thinking, this is a textbook spot, right, where a lot of traders will pile their stop losses just above this zone, right? Thinking, oh, if it breaks, I'm fucked, right? So I'm going to set my stop at, let's say, 6142, right? 6142.5, whatever have you, right? So they think if their stop loss there, if the trade goes past that, they're fucked. That's why their stop is there, right? Meanwhile, these breakout traders are just sitting there ready to buy if it pushes through. So you have all these two, activities going on at once. Now, watch what happens when, let's say, price spikes up, tags this, 6140 level here, and then boom, you got this long ass wick, right? And that's a liquidity sweep, okay? It just triggered all these stops and all these breakout orders and immediately just price dumped back down, right? So why? Well, smart money took the liquidity and just swept it through, flipped the script and reversed it, okay? So you can see volume spike, here as well. That's what happens when you end the liquidity sweep. Volume just surges down the opposite direction. So that is how you're basically wanting to look at liquidity sweeps, right? So if you want to see how this actually works, you can look at the tape and any volume analysis indicator that you have, okay? And you can see that when liquidity sweeps happen, right, orders just, let's see, get this. When the liquidity sweeps happen like this, orders just blast through, right? And the tape, you know, just the order flow, a book map just goes nuts with all these, you know, big orders, big seller buy orders that are smashing through the price, okay? That is how you're basically looking at liquidity sweeps. So how do you know where these sweeps are going to happen? You know, it's all about finding liquidity zones, right? There are spots on the chart where all these orders pile up, and these are the big players, right? And here's what I'm looking for, where I just want to see all these orders pile up. You got swing highs and lows, right? Equal highs or lows where price has bounced or rejected before. Delete that here. There. Now, equal price where price has, you know, equal lows or highs where price has rejected before, just like this, like something like this, right? That's what you're expecting, okay? You got supply and demand levels just like the one I showed you up here as well, okay? And you're looking for stuff like that, support resistance levels, whatever kind of levels you like to see, right? Fibonacci levels, that sounds fancy, but some people, I know a lot of people that use Fibonacci and are profitable, right? You can watch the 61.8% or the 78.6% retracement levels. A lot of orders stack up there too. Those are good levels too, right? You're wanting to find these key liquidity zones to perform your liquidity sweeps trades in, your liquidity sweeps setups, right? So let's look at another setup here on the ES chart down here, a trade I took, okay? And what you can see here, let me zoom in here. This is a demand zone that I had marked up. And what I wanted to see here was, I wanted to see obviously it had an equal low too, by the way, okay? So I wanted to see it push this zone here, push this price, and sweep any stop orders that are happening past this zone back here, right? And what I want to do is, I want to see that people are trying to go in here and they're trying to go long, right? And they're going to put their orders just past this zone. That means that I want to make sure that I first wait for all their stops to just completely get swept out, right? I want to sweep those stops, and that's when I want to look to get into my entry, okay? So I'm going to use tools like the book map or the tape like this. I have an indicator, absorption indicator as well, that gives me the ability to see when, you know, when a certain price has gotten absorbed. Also, I have the VWAP to make sure I can see what the fair average price of the day is too. Whenever price reaches around VWAP, I like to see it because I know that it could eventually potentially react a certain way around that, you know, that VWAP, right? So I look for that too, okay? Now, let's get to the good stuff here is the strategy, okay? Most of you guys are wanting to see, all right? I'm going to show you how to trade these sweeps, all right? I'm going to give you I'm going to give you one strategy that I use for, you know, every you know, index I trade. SPY, ES, QQQ, you know, even, you know, these other lesser known, I would say, commodity stocks like Apple, Tesla, you know, Amazon, Nvidia, all that, okay? So it's just one simple strategy that I use, and it's very simple. Just listen up closely, okay? So the first thing is you want to identify a zone. Let's look here. We have a zone. We have a demand zone. All right, so when you have that zone, right, you mark your liquidity zone, for example, a demand zone or supply zone. And then you want to wait for the sweep. As price reaches down here and comes down to your demand level or your supply level, whatever have you, you want to see it come down to this level, sweep the low of that demand zone, and then once you wait for that sweep, once you see price just spike through that zone with a lot of volume surge going on the tape, going on order flow, right? You want to confirm the reversal. You want to see a strong rejection candle. You want to see, let's say in this case, you know, you're in demand zone. You want to see sellers die out and then buyers start to step in, right? So that means check the tape, check any real market data time like level 2 data to see if buyers are stepping in, okay? Now, after that, you want to enter the trade in the next candle, okay? So enter the trade, go long, set your stop just beyond that sweep level that it made, because if price goes beyond this sweep level right here, that trade is invalidated, okay? So set your stop there, and now the target, the fun part. Where do you target for a trade? Well, you're gonna wanna target areas where you know that price could potentially reverse back down, okay? This little lower high that was, or sorry, higher low that was created here is a potential spot for a reversal, right? But you can see that it wouldn't really go in well with your risk reward ratio, so you're just going to omit that, okay? Now, the next thing you're going to look at once you enter the trade here is find the level that actually would correspond with your risk reward ratio, and if there's any level where a price can be invalidated. That level that where you could see a lot is VWAP here. This is the first level where you should see the price could be invalidated from is VWAP. Now, once price goes to VWAP, it would be smart to at least take some sort of trim out, okay? And then probably maybe lower your stop up a little bit or set your stop up to break even would be perfect. Now, once price does get to that first trim and starts back down and it hits whatever stop you changed to, then that's all you're getting. But if price comes down to it and then eventually comes back up, breaks that first trim level, and then you set your stop up for maybe a high of day, a high of pre-market, what have you, and that's where you would set your full take profit. Okay, so that is literally how you're going to trade a liquidity sweep. It's very simple. You're going to want to use tools. Tools are the most important part, like the tape, time and sales data, order flow, book map, VWAP, just having an indicator that shows when absorption, when price has been absorbed, all of that, okay, orders have been absorbed, all of that will help you tremendously besides just having your levels plotted out, okay? Now, the thing is, a lot of this can be said, right? And trading sweeps is extremely profitable if you do it right, but you can still fuck yourself over if you're not careful, all right? There's things that people do wrong that no matter how good their strategy is, they will still not be profitable. And these are the things you can do. These are some tips I can show you that will help you just become a little bit better of trader and maybe push you towards, becoming a little more profitable and making money trading. The first thing is the most important. I'm sure a lot of you have heard this before, but still so many of you struggle to fucking do this, and that is risk only less than 2% of your account per trade. All right. Don't go all in. Don't bet the house all in. All right. Don't go all in on just one trade. All right. No matter how good it looks, because trust me, it never looks that good. Now, 2, okay, you're going to want to set your stops on an actual valid level, all right, to account for volatility. ES can be wild, SPY can be wild. You should set your stop on a certain price target that actually directs invalidation, okay? If you set a stop in a price where there's no reason for you to set that stop, right? There's no reason for invalidation, then you're not doing yourself any favors. There's no reason why price will react around that level. So set your stops at a correct price where invalidation can occur. Now, the next thing is backtest your ass off. Use platforms like TradingView or Thinkorswim to just replay and test your strategy. Test everything. Learn the platform even more. Master the platform. Just learn how to become a better trader. Learn how to execute better, right? Learn how to enter trades better and quicker and more efficient. Backtest. If you're not backtesting, you're just basically gambling with your strategy. The other one, and second to last, is the time of day matters, all right? So you're looking for a correct time to trade every single day. Have a set time, have a routine. Sweeps often happen during higher volatility times, like New York Open, or right at the end of the New York session, okay? So look for times to trade that offer a little more volatility so you're not just caught up in a trade. The last one is don't chase, okay? If you miss a sweep, if you miss any entry, whatever strategy you're trading, if you miss any entry, just let it go. There's always going to be another setup, and you're just going to try to catch a trade that's already gone its way, and it's going to fuck you over, okay? That is literally everything I can give you on liquidity sweeps. It's super simple, yet it's so effective. But if you do it correctly and you apply proper risk management, you can spot them, trade them, and make money with it, okay? So go practice this stuff on ES, SPY, whatever you trade. Don't be a dumbass. First, just back test, simulate, do simulated trading with it. But if you find it helpful, please implement it in your trading, as well as anything like market data, like real-time market data, like, the tape, time and sales data, order flow. VWAP is extremely good. If you get yourself an indicator that actually is, can help you become profitable, give you that edge, that advantage, like absorption indicator, VWAP, all of that is perfect, okay? So if you have any questions, feel free to leave it in the comments, and I'll get back to you in the next video.